Looks like we're live. Let me get this going. Let's see. All right, looks like we're good. Just send out this link. Hey guys, how's it going? I'm gonna send out this link to all of the groups real quick, and then once we have this live, we can get started. So if you guys have any questions, feel free to put them in the Q&A. I mean, either in the Q&A if you're on the Zoom, or if you're on the YouTube, just put it in the chat, and I can get to those questions once we get to that point. But let me just send out this link, and then we'll get started. Hey guys, how's it going? I'm gonna send out this link to all of the. Let's mute that. Send this over to the public groups. Let's mute this. All right, looks like we're good. One last place, YouTube, and the Facebook. All right, let's copy this over. All right, looks like we're good to go. All right, guys, if you guys have any questions, feel free to put them in the chat, and then I will go over any questions you guys have, but I'll mostly be focusing on the weekly chart analysis. So basically what I'm gonna do is I'm gonna take all of my zones off the chart, and I'm gonna go down every single pair, and then I'm going to mark them up from scratch, just so you guys can see exactly, when and where price is likely to reject from. Like using OddCAD here for an example, obviously these zones were created last week. So we created this, at the beginning of the week, and you can see that the price respects these zones. Obviously, you see price goes from zone to zone, and that's it gives you an upper hand and an edge in the market because obviously if price is going to get near a zone, that's going to give you some sort of hint as to whether you should take a trade or not. Because obviously if it's getting close to this upper zone, you're not going to want to take any buys. If it gets close to these lower zones, you're going to be tempted not to take a sell because it might just reject off it. So I'm going to do that for every single pair, just so that, pretty much you guys will have a good understanding as to where and where not to trade. And then if you guys have any questions, I could take breaks in between and I can answer those questions, and then we can just go back to the list. So let's get started, guys. And then let's get ready for a good trading week. Let's use here. Kyle's here. Nice. So Kyle's here. He's doing grades, and can't wait for Kyle to make this his full-time gig. All right, guys, so let's get started. Let me see if I have everything here. I think that's about it. Yeah. Cool. So let's get started, guys. So I'll start with OddCAD over here. Like I said, I'm just going to go and remove all of the zones from the chart and then start from scratch. So this is pretty much a naked chart here. It's a huge difference when you have the zones there. So you can see right here, we have the zones lined up. You can see exactly where price rejects from. But when you don't have the zones, you can see it looks way different. It's kind of harder to see, where the rejection points are. So to get started, if you guys have access to the K2 indicators, basically what we do is we turn on our K2 SR version 2 indicator right here. And then it plots all the zones on the chart for you. So once you have that, then I take the rectangle tool, and then I go ahead and draw my zones over the K2SR zone. So if they're connected like how they are right here, if they're too close, then generally what I do is I just connect them together like these right here. You can see that they kind of overlap a bit, just so that you can create a bigger zone so you know not to trade within that area. So right here, another zone. Again, right here, another zone. it down here. And then, well, we can create this into like one big zone. Or actually, we'll just use separate zones. And if we want to connect them later, we could. I'll just do it so it's easier. And you guys can see here, it's really simple. If you guys have the indicators, you just draw your zones over. But I'm just doing this for you guys who don't have the indicators, because I know not everyone has access to the K2 indicator. So this is just going to give you guys some framework for the week. So those are the zones right there. After we do that, I just had the K2 SRs, and there you go. You have the zones lined up for you, and you know exactly when and where not to trade. Like right here, you can see it's a nice rejection off this top. So what could happen here is it could probably drop down, or if it continues up, because you can see right here, it's it's clearly in an uptrend. So there's one of two things that can happen. It can either reject off this point, come back down, or it can break above it and continue upwards, to continue the trend up. And if you guys have access to the K2 pivots, you guys can turn that on. And then you can see the overall trend just by turning that on. So, obviously price is above the pivots, price is trending up, price is below, then it's trending down. So like I mentioned earlier, if you want to do it by hand, you can draw your own trend lines with the parallel channels tool. So like right here, this would be an uptrend. But if you guys have access to the K2 pivots, you just turn that on, and it takes out pretty much all the work. You just literally look at where price is, and obviously it's in an uptrend right here. So this is OddCAD. The upper level right here is going to be at, I'll just consider this the upper level. It's going to be at 0.9653. I'm just going to round that up. And then the lower zone right here is going to be 0.95543. So these are pretty much the two important zones right here, because price is already within this current zone. So the thing is, once price breaks above here, it can either continue upwards, or it can reject off and come back down. And then if it does come down, it can come down here, and price can either break below it or reject back up. So it just really depends on how price moves this week. I was looking at the calendar. There's a ton of news this week, so I don't know. The market might be a little funky this week. So let me pull up the let's see if I can grab it over here. The news from Forex Factory. So if you guys know where to look for news, we usually look on Forex Factory. So these are the news events from this week. There's a ton of stuff going on. Tomorrow, there's Powell speaking, the Fed. So that's going to affect the market. I don't know if we're going to trade US 30 tomorrow morning, because it's at 7 a.m. So that's usually when our trade comes out. So you could probably see market moving pretty crazy tomorrow with the Fed. And then again, we have the Fed speaking again on Tuesday. So it doesn't look like, actually, it doesn't look like we're going to trade US 30 at all this week, because the Fed's speaking every single day. They're speaking on Monday. On Tuesday, he's speaking again. He's testifying, Powell. And then again on Wednesday, he's testifying again. And then again on Thursday. So it's, I mean, you guys can trade it if you want. But me personally, I'm probably not going to trade it, because it's just way too risky. I mean, there's, literally you can take a buy and it could shoot the opposite direction, or you can see price just spike all over the place. So I think it's just too risky to trade US 30 this week. It looks like everything else is, let's see, the news is usually happening in the morning. So our FX trade should be all right. We're probably going to skip the 6 a.m. trade, and we'll probably take the 10 a.m. Because the news is at 7. Powell's probably going to be done speaking around 10. So at that point, we could take a trade. And then at night, GBP news right here. So London looks like it's going to be a bit rocky, because there's a lot of news during London this whole week. There's news tomorrow, prior to London Open. And then there's news on Tuesday at midnight. And then again on Wednesday. There's literally news every single day. So, I mean, this week is going to be a very conservative week. This happens every once, like 1 week out of the month, there's going to be crazy news. I know there was a lot of news last week too, but it's the same thing over and over again. You guys saw how the market moved. So we'll probably sit tight with that. I'm going to be very careful with my trades this week. but I'm still going to call some trades for you guys, you know, if we see anything worth taking. Let's see. Kyle said, "Speak into existence." Yeah, Kyle, you for sure are going to speak into existence. I know, because you've been pushing, you know, for a while now, and you've been getting a lot better every single day. Let's see. Kyle said, "Forex pairs." Yeah, Kyle. So like, let me pull up the news again. Yeah, right here. You know, there's news literally every single day. So for Forex, we're probably gonna still trade it because we can trade, you know, in between the news. But for US 30, it looks way too risky. So I'm probably not going to call those trades, because, you know, there's times when you should be trading. There's times when you shouldn't be trading. Like, you don't have to trade every single day or all day, like a lot of people, you know, against popular belief. But sometimes it's better to just conserve your account and be safe. So let's see. Kyle said, "What time is Powell speaking?" So tomorrow he's speaking at 7 a.m. my time. So that's going to be 9 a.m. your time. I think you're on the East Coast, right? Yeah, 1 p.m. East Coast. So he's speaking at 7 a.m. on Monday. He's speaking again at 7:30 on Tuesday, which is my time. So it's going to be about 9 o'clock for you all week, it looks like, because he's speaking at 7 a.m. every single day. So that'll be 9 p.m. Eastern for you. I mean, sorry, not p.m., a.m. So pretty much every morning, you know, you're going to get these, and then we'll probably take trades after he's done speaking. So around 10 a.m. my time, 1 p.m. your time. So yeah, that's right. Yeah, we got to be really safe, because, you know, you don't want to blow all of your gains that you made like last week and the week before off, you know, being risky this week. All right, cool. So like, let's go back to the chart. So you guys saw OddCAD. I'm going to move on to the next one. Odd CHF over here. I'm going to delete everything off this, zoom out, turn on the K2SR version 2, and draw my zones. So let's see, we got one zone up here. We got one zone right here. Let's see. I'm probably just going to make this one huge zone because it looks like pretty much connects. Let me see how much space is in between each zone. Yeah, so generally, if there's less than 10 pips between one zone to the other, I just connect them and make them one big zone, because the thing with this is you don't want to trade within those small, like, little parameters. Like right here, it's like 12 pips, because my spread is 3 pips. So if you're going to enter this trade, you're going to enter it at a 3 pip loss in order to cover the spread. And then you also go to cover another 3 pips and you're trying to get out. So that's like a 6 pip required, you know, spread total overall. So if you're going to enter this trade, you can only lock in like about a few pips before it might reject off it, or, you know, in the other direction. So to be safe, I would just connect the zones when they're too close. Like right here, see all these zones right here? This is one zone right here, but you can see these zones cross over a ton right here. So I'm just going to make one big zone. And this varies from pair to pair, especially for pairs like odd CHF that don't move very fast compared to, you know, like a New Zealand dollar pair or Australian dollar pair. So in that situation, I would probably just match these together. So once we have that lined up, I'm going to turn off the K2SRs and then zoom out. You guys can see here that the same area that's been tested over here, because we got these zones from today, right? So on this, like from these points, you can see these zones are similar to what happened way back here in June. Like history is literally just repeating itself. So these are strong zones right here. So for odd CHF, the upper zone is going to be 0.6666. Just sixes, yeah. So 0.6666, and then the lower zone down here is going to be 0.6580. So pretty much these are going to be the two important zones right here. You can see that price looks like it's just consolidating. It's literally just going sideways, bouncing from zone to zone. So if you have the upper zone right here, you know, this will give you an upper hand to determine whether, you know, price is going to continue up or if it's going to reject back down like it did over here. So price came down, rejected off this zone, came down, and it just keeps bouncing back and forth. So if it doesn't break above this zone right here, you know, odds are it's just going to keep bouncing in between this range until it does. And then once it breaks outside of it, you can anticipate price to either continue in that direction or continue down this direction. But we'll have to see how price moves. Like I mentioned, there's a lot of news this week. So, you know, obviously all these pairs are going to get affected pretty heavily, especially because this is the Swiss franc. So, you know, if you guys are familiar with the Swiss franc, it's a safe haven currency. So since the Fed is speaking, you know, this whole week, if the news is bad for the US, the Swiss franc's probably going to gain strength. So if that happens, then we're probably going to see price come down. And then if price breaks this zone right here, odds are it's going to continue further. So just keep an eye out for that. I'm not sure what the Fed's going to say. You know, we're still during COVID conditions, and you know, a lot of businesses are still closing down. So, and they're still going to be printing money. So we'll just have to see, because I think they're also going to announce, I forgot what that thing's called, the stimulus package or whatever they're going to do moving forward. You know, they're going to have to announce it at some point. I don't know if it's already been announced, but if it hasn't, it's probably going to get announced this week. So just looking at this point here, you can see that here, we can even look at the trend. So I said that price was consolidating right here. So if you turn on the pivots, yeah, it's pretty obvious. So price is trying to continue upwards, but if it doesn't break this zone, it's probably just going to continue sideways. So something to look out for. So that's odd CHF. Let's move on to the next pair. Next pair is odd JPY. I'm gonna do the same thing here. Delete the zones. Turn on the K2SR version 2. And then check this real quick. All right, cool. So we'll get the rectangle tool out right here. Draw this upper zone. Draw this lower zone. And guys, I'll go over indices too, because I know a lot of you guys here want the zones for the indices as well. So usually I mark these up on the 4-hour, but since on the indices we trade on the short time frame, I'll go in the lower time frame and draw the zones there for you as well, just so you guys can have a good idea. You know, if you guys do decide to trade it this week, it's going to be risky, but you know, I'm going to do it so you guys have that to your advantage. So and odd JPY is kind of messy. All right, turn off the zones. You can see here, just like I mentioned before, you know, price, look, if you look at price here, so let me just take this off. If you look at price right here, you can see that this same exact area where price currently is was tested way back in December of last year. So you can see this is a strong zoned area, because the same exact zones have been tested. Like, look how many times it's been tested. It's been tested in May of last year, and then again in July, and then again in December, and then again in June, July, and then September. So it looks like this is a really strong point, you know, where price currently is. So if it just keeps repeating itself, it's probably going to come down further. It looks like it's going to continue dropping. So you guys can see the pattern here. If you guys have access to the zones, you can see here that, you know, you can see these perfect patterns right here. You can see exactly how price is moving. And you can kind of eyeball it to see where price is going to be going further moving forward. So here's odd JPY. Let me go to the current price. So the current zones right now, it's stuck within these two zones. I'd probably consider this the important upper zone, because price may reject off it. It looks like it already has. So it might reject off and come down further. So this upper zone right here is going to be 76.48. And then the lower zone right here is going to be 76.11. So if price is to break below this zone right here, which it looks like it's been attempting to, well, then we can probably anticipate this to come down further and possibly break this zone down here as well. You can see right here, price tried to come down, but it couldn't close below the zone. And this is a very strong zone. You can see all the wicks right here. So it's tested the zone quite a bit of times. And if you go back in data, you can see right here, it's tested this zone, you know, countless times right here. It's a strong zone. So if it breaks this zone, you can see right here, once price broke this zone, it came down pretty heavily. So if we measure this, you can see it came down like nearly 200 pips. Like that's a lot, that's a big move. And then again, right here, price broke the zone, came down like, geez, look at this, guys, like thousands of pips right here. What is this? Nearly 2,000 pips. So this right here, you know, just looking at this here, if price was to break below the, again, right here, price broke the zone right here, and look how far it dropped. geez, like 300 pips. So again, right here, if price breaks the zone and it breaks farther below here, you can anticipate a nice drop. So I'm probably gonna put a whole bunch of sells once that happens. And like I was comparing the CHF earlier, the JPY is also a safe haven currency. So if the Fed speaks tomorrow and they say bad things about, you know, the US currency economy, then, you know, obviously they're gonna try to make it sound good. So because it's, you know, it's the US economy, but in reality, it might not be so great, especially if they're going to continue printing money for this stimulus. So we can probably see this drop this week, but we'll see how that plays out into the trading week. Let's see. Hey, Brian, how's it going? Kimberly Rowe, she said, how do I get the K2 indicators and strategies? Kimberly, you can get it on our website. So I'm going to put the website on the chat. It's just k2trades.com. Or I could just show you on the screen. Let me see if I can pull it up. Pull this up over here. All right, Kimberly. So basically, if you go on our website, k2trades.com, super simple, just, you know, the company name, and then you scroll down to the bottom, we still have our trial going on. So if you want to sign up, we still have our trial for 50 bucks. You get access to all the K2 indicators, the K2 video course, and pretty much all the K2 premium groups as well. So if you want to go back and watch all the videos and learn how to trade, you know, exactly how I'm doing or how to chart, it's all available on there. So you just go to k2trades.com, scroll down to the bottom, and we have the trial available right here. Real simple. So let me go back to the charts over here. So yeah, like I was mentioning with odd JPY, it looks like, you know, if it breaks below here, it could be really nice. Like it could come down, and then if it breaks even further, you know, we could see a huge drop coming right here. But we'll have to wait and see. Like I mentioned, you know, we don't want to, like literally, you don't want to predict the market. You kind of want to just wait and see what happens, because, you know, if you predict the market, there's no guarantee it's going to come down like that. It could, you know, very well go the opposite. You'll just have to see how price moves next week. The market just opened, so it's moving very slow. It's probably not going to move faster until tomorrow morning once the Fed speaks. So let's keep going further. So it's odd JPY right there. Sure, no problem, Kimberly. Next pair is going to be odd NZD. So I have these lined up from last week. I'm just going to delete that. Turn on the K2SR version 2 right here. And then let's draw our zones. So this is going to be the upper zone right here, the lower zone right here, this zone right here. This is actually a really nice pair. I like when the zones are actually pretty spaced out like this, like they don't overlap, because it gives you a lot of structure in the market. Like here, so let's take off the SRs, and you can see that this actually moves very nice. So you can see price breaks through here, rejects off this point, comes down, double top, comes straight down right here, rejects off this point, and it literally like respects these zones pretty nicely. So currently right here, we don't have a lower zone on the 4 hour. So when that happens, I turn on the K2SRs, I go on the higher time frame. So I go on the 8 hour, and you can see right here that the next zone is way down here. So that'll happen where, you know, price is broken into a new area where it hasn't tested, you know, in a while. So last time it tested this point was in July. It's a couple months back. So you just go on the higher time frame like I did here, go on the 8 hour, and you can see the lower zones right here. So once that happens, I just turn off the SR, and then I'll go back to my 4 hour chart right here. And then you can see how perfect everything lines up. You can see, so this is like one thing I like to do. I like to go back in the future, like in the past, and I like to see how it's moved in the future. So you can see right here, the same exact price point where we are, this was last tested in July. And then you can see it's tested so many times here from July to June to, let's see, May. So this is a very strong support zone. So you can see here, if price doesn't pass the zone, it comes down pretty heavily. So price rejected off this point, it drops like nearly 200 pips. And then when it crosses above, it goes to the next zone right here. Like, it's really simple if you guys really look at it that way. So right here, it looks like price is going to, it looked like it tried to drop. So it looks like it's establishing a lower high right here and a lower low. So once it comes up, it's probably going to come shooting back down right here. And if it breaks below this point, Like you guys saw what happened like way over here. If it breaks below this zone right here, odds are it's probably going to drop pretty heavily. But like I mentioned, there's a lot of news this week, so we'll have to see how this plays out. It's kind of a tricky pair because it's the Aussie versus the New Zealand dollar, which kind of move a little similar. So we'll give that some time, but it'll give you a decent understanding as to where price is going to be moving. But it looks like it's going to come down. So it looks like it's coming down right now already. It's probably going to come down from here, test the zone, and once it breaks below, it can continue dropping for a free fall. But there is news coming. Let's see, that's in 2 days. So this is actually a lot of time. On the 22nd, today's the 20th. So we have some time here. We'll see how it plays out tomorrow with the US news. But so this is going to be the zone. So the upper zone right here is going to be 1.0832. So this is going to be the upper zone. And the lower zone right here is going to be 1.0739. I'm just rounding that down so you guys can have a cushion there. You're better off having a cushion than having this upper zone right here, even though it might reject right off it. Like right here, odds are it could probably come down further. You can see right here, price came down, it tested the zone, it rejected right off it, but it came back down and tested it actually to the bottom. So those are the zones there for odd and ZD. Looks good so far. We'll probably give that some time and see how it plays out. On to the next pair, odd USD. Same thing here, delete this. And then we will draw our zones right here. Let me see how far is this. We can probably connect these two right here. It's about 20 pips. Brian's asking, do you set alarms on the high and low of the zones? Personally, no. Since I trade on the 4-hour, Brian, I just literally at the close of the 4-hour candle, I go and I just look at the chart and I see where it's at, because I don't specifically trade off the zones. I just use the zones as reminders to not trade once price gets to these specific points, because these zones can be highly manipulated. So you can see right here how price came up and then it rejected back down. The problem with this is that it's not always going to do this where it rejects back down. The thing is, it could break above it and continue upward. So I don't necessarily trade off the zones. What I do is I just we talked about this before. So I usually use the K2 zone strategy, and I pretty much just catch the momentum swing. So let me just draw this right here real quick. I'm going to finish the zones and then I'll show you what I mean, just so that other people can see what I'm talking about. So we got these zones right here, and we'll hide that, and I'll just turn on the momentum indicator. So like I mentioned right here, see, like a lot of people might have taken this sell right here for once they noticed that it was at a top right here, but I would wait for the sell signal right here, and I would just ride this down from this point for about 40 pips right here, to the next zone. Same situation right here. Like we have a buy. If this breaks above it, then I'll probably ride that above instead of me taking, a sell right here just because it rejected off it. But a lot of people trade that way. I mean, there's a lot, like we discussed, Brian, there's a ton of ways to trade it. Like you don't have to trade it the way I do. Some people like to trade break and retest, like we talked about, in our last mentoring session. So basically, like right here is a good example right here. So price broke below, it broke above, it retested, and then a buy signal right here. So literally someone could have taken this buy like right when it closed above here, or you could have waited for the buy signal right here and take this break and retest entry over here. So like either way, if you took, one or the other, it would have worked regardless. But I mean, there's a ton of ways to apply the strategies. Sure, no problem, Brian. Let's see. Sneaks in window seat said, do you only draw zones over the red indicator lines or both red and green? So I draw them over both. So let me just show you real quick. I'll just hide this stuff. Yeah, because the color of the zones don't really, so this is how they're established. So pretty much when price reaches a specific price point, it's tested the same exact price point, like where right here, what's 0.72759. It's tested this point at some point recently or sometime in like way back in the future at that same exact price point. So the thing with these green and red lines is that this just establishes a high right here, and this establishes, you know, a lower zone right here. So the thing is, they kind of work intertwined, because once price breaks above it, then it just becomes a support, or if it comes back below it, it just becomes a resistance. So I draw the lines over both of them. So this is where it looks like without my zones, but when I put them on right there, you can see that it's I mean, I colored them the same color because they're both going to be considered rejection points regardless. So as long as you have, you know, the zones plotted on there, it doesn't really matter, you know, how you interpret it, because once price goes above it, it becomes a support. If price breaks below it, it becomes a resistance. So you can just draw your zones right over, you know, both of them. Like even right here, you can see how these zones kind of cross over. So you can see there's this green zone down here, but there's a red zone. But I ended up just putting them into one big zone right here. And yeah, because they're just used for like bumpers. Like another way of looking at this, they're kind of like bumpers. You can see price comes up, bumpers right off, bumpers down here, bumpers right here. And it literally is like, they're just rejection points. So that's odd USD. I'm not sure if I mentioned the zone numbers, but let me just remind you guys right here. So it's within the zone currently. So the upper zone right here is going to be 0.7325. And then this lower zone right here, I'm just going to ignore this point because price, you know, let's count these two zones right here. So this is the upper zone at 0.7325. And then the lower zone right here is going to be 0.7254. So it looks like AU is just consolidating right now sideways. But once it breaks above the zone, this number that I gave you guys up here, it can probably shoot up to this zone. Or if it breaks below this zone right here, it could probably come down and test this zone, or break right through it and test the next zone down here. So those are the two scenarios that can play out right here. It's kind of harder to determine when, you know, price is consolidating sideways, because it could literally go either way. Sneak in window seat said, gotcha, at least 21 pips between the zones, right? Yeah, so for me, I like to keep about 21 pips, you know, between these zones, because it gives you a good cushion. So like right here, you can see that this is a huge zone right here. But if, you know, the zones are too close, let me turn on the SRs and I'll just hide this. So you can see right here, if these zones are too close right here, it's only about 15 pips. It doesn't really give you enough cushion for you to like trade out of it, because you're gonna have to cover the spread. So I like to give it at least some cushion, because I don't want to, I mean, unless you're scalping, then it would make sense for you to just trade within the zone. But I trade intraday, so I want to, so let me just put this back up here. So basically, once price breaks, you know, outside of the zone, I just want to trade in this open field. Like I don't want to get in the way of the market makers or anything, because these areas right here where the zones are, that's pretty much where all of the institutions and market makers trade, because they know that a lot of people who are trading price action, they're all trying to predict where the price is going to go. So you can see right here, when price breaks, when it gets to the zone right here. So I'll just show you guys an example. So if you guys were to see this on the chart, you know, and obviously a person would think that this is like a break and retest and it's probably going to shoot up, right? So if you were to enter a buy right there at the, say this point, because it broke the zone, it comes down and it stops you out. So that's why I don't like to trade where the zones are, because the zones are manipulated areas. Because the thing is, if you're trading like everyone else, you know, a lot of people are watching this specific zone and a lot of people are predicting that it's probably going to come up because it was in an uptrend right here. So like the thing with this specific pair at this time was that, see, it was like in consolidation right here. And then once it broke above it, obviously people are going to think it's going to continue upwards. And that's how people get tricked. So instead of trading, you know, in these areas that are highly traded and highly manipulated, I like to wait. Like I just like to wait for a break outside of those little areas, like right here, and I'll just trade within these zones instead of trading, you know, guessing where everyone else is guessing. Because when you're doing that, you're kind of just getting in the way of the institutions and the market makers, and you know they're going to push price wherever they want to push it. So I'm not trying to play their game. Like I'm not trying to fall for any of their tricks. I just want to trade where it's outside in the open field, and then I just ride it to the next zone, like right there. Same situation right here. Like I wouldn't want to trade within these areas, because a lot of people are looking at these areas and they're, you know, they're predicting if price is going to go up or if price is going to go down. So instead of guessing, I literally just wait for the institutions to make their move and push price outside, you know, one of the zones, and then I can just ride it up to the next zone. Same situation if it comes down. Like you know, it's nearly impossible for you to really predict the market because market could be going your way, and then the institutions could just push it wherever they want to go. So it's just too risky to trade it that way. I mean, if you want to be a risky trader, if you want to be a risky trader, you know, you're more than welcome to scalp within these zones, but it's just too risky because you can see right here, like if you're just trading within, you know, the open areas right here, you can literally just ride these up to this zone, down to this zone, up to this zone. If you tie in the momentum indicator, it'll give you the direction. So like right here, you can see price comes up within this open field, right? We have this buy signal. You could literally ride this buy to this next zone for like 100 pips. And then again, right here, we got a sell signal out in the open, right? You could ride this down for a gain of like 80 pips right there. And then same situation right here, a buy signal, you ride it up to the next zone and then get out right here for about 60 pips. You know, it makes more sense to trade this way and trade with, you know, you're basically just riding the wave. So when you have the momentum indicator, this is going to indicate, you know, where price is moving, like where the big players are pushing the market. If they're pushing it up, you're just going to ride that wave up. You're like, you're not going to try to predict where the market's going. When they, you know, they push price upward and you get a buy signal, you literally just ride this wave up. You ride the wave and then you jump off the wave once it gets, you know, the deep end over here. Same situation right here. You ride this wave down, you jump off once you get to this lower end right here. And then vice versa, back and forth literally all day. Same thing. See, like right here, I wouldn't take these trades because it's within these zones. So you can see right here, price comes up. And if you took this buy right here, you would have gotten caught in this trade, like literally just going sideways. And, you know, that's how a lot of institutions and market makers trick people into, because the thing is, everyone's trying to predict where price is going. It's impossible for you to really predict accurately, because even if you predict this uptrend right here, so like, let me go and rewind this over here. See, if you guys didn't have this zone right here, if it was just a naked chart, this looks like a nice buy right here, right? So if you were to take this trade right here, you would have gone screwed because you wouldn't have this zone here. But since you have this zone, you wouldn't take a buy right there because obviously price is probably going to reject down like it did right there. And you could literally have taken the sell and wrote it down with it. This is like, and this is why I don't trade, like a lot of people ask me why I don't just trade price action, because the thing is everyone trades price action. And if you trade exactly how everyone else is trading, you're going to lose, because majority of people lose at trading because, you know, price action is just, it's a good strategy, or, you know, it's a good theory and strategy to use, but you have to pair it with something else. You can't literally just trade tops and bottoms because that's how everyone else is trading. And, you know, the banks and institutions, they're going to give you a few wins here and there, but then they're going to wipe out your account when they get the opportunity. And that's why you got to be on top of your game. And that's why I trade the way I do. That's why I trade momentum. Like a lot of people ask, why do you trade momentum? And it's simple, because it works. You know, right here, you have the momentum swing up, like I mentioned right here. So, you know, obviously some people would take they would catch this double, they would probably identify this as a double bottom right here, which is correct. You know, price tests twice right here, 1, 2, and then you could have taken a buy right here. But this is a risky trade because there are different scenarios here. Like, you know, if the market makers want to push price down, they could have pushed down right here and stopped whoever out that was taking this trade. So instead of just entering right here, which could have been a decent trade if you entered a buy, I just wait for that buy signal. See, like right here, and now I'm like, all right, they're pushing market up, so I'm gonna go and take a buy right there. I'm gonna jump off the wave once it hits, you know, this next zone, and literally hit TP right there. Like, it's real simple. A lot of people like to overcomplicate trading, but in reality, you just have to keep it simple and stick to a plan. You know, if you're gonna follow the strategy, just trade that strategy. Don't keep changing it up, because if you keep changing it up, that's how you get caught in that cycle where it's like you think your strategy is not working, and then you jump to another strategy, and then you just keep jumping from strategy to strategy when you could have just mastered that first strategy and been good, you know, along the way. Nice. Roscoe said the light bulb just came on, makes 100% sense. Yeah, you have to look at it from a different perspective. You know, you can't look at the market the same way everyone else is looking at it, because it's just not going to work out long term. And Kyle here said, like staying within bounds. Yeah, exactly. So I like to stay, because once price breaks into these zones, you can see that price pretty much goes to the next zone. So instead of trading on these areas, you're pretty much just trading the open field. Kyle said, what's the difference, price action versus zones? Well, price action is like a whole different trading. Well, I mean, it's not a whole different trading style, but it's a whole trading style of its own. You know, for price action, people will try to identify, you know, where the bottoms are, where the tops are. And it's similar to with the zones, but we're not identifying tops and bottoms. We're just identifying rejection points. So we want to know where price is going to be rejecting from, but we're not like, oh, this is the top, this is the bottom, you know, because obviously once price breaks this, you know, this little bottom right here, I guess you'd call it, it creates a new bottom down here. So there's not really a huge difference between, you know, identifying rejection points from price action and using the zones, because it's pretty much the same thing. But when comparing price action to momentum, literally like what we're doing. So here, let me show you another example. So for price action, a lot of people like to identify these bottoms. So they see this double bottom right here and they want to take a buy because they think this is a strong support, right? For momentum, we're not predicting any rejections. Like we're not gonna take a trade just because it rejects off this bottom, because that's how market makers trick you. Like they want you to think that it's always gonna play out like this, but obviously it doesn't, because look right here. So you can see that this was a nice, let me just take this off. You can see that this was a nice rejection right here, right, for this double bottom. So obviously this was a nice rejection, it came up. But look when price gets to this point over here. See, this is another price action entry right here. People would consider this like some sort of double top right here, right? Because there's a top rejection right here. So if you're just trading price action, you would have taken a sell right here, and then you would have gone stopped out, because it doesn't always play out that way. That's how the banks and institutions trick, you know, traders, because they want you to think that that's always going to play out. Like it doesn't really play out that often. Like you can see right here, price comes down. Even right here, this is you know, this would be considered like a nice rejection point right here. So a lot of people would take a sell. So price comes down. It's literally like a break and retest. It comes down, break, retest right here. And then what happens here, people usually like to take a sell, right? If you take a sell, ends up stopping you out, because it doesn't always play out. The banks and institutions, they let it happen sometimes, because they want you to have that, you know, belief that the strategy works and it's gonna, you know, they give you a few wins here and there. But once you get burned enough times doing this, you can blow your account. And the difference between, you know, we just discussed price action and momentum is, instead of us trying to identify, you know, predict where price is going to break from, we're just piggybacking the waves. So you can see right here, let me just, so literally like right here, some people would have taken a buy down here, but we're literally just waiting for the buy momentum, like momentum pushing up, and we just ride that wave to the next zone right here, exit right here, make your profit. So we enter this buy, exit right here for 60 pips. Again, right here, price breaks the zone. We could take a buy right here, next zone, another 60 pips. This sell right here, we're literally just piggybacking. So the banks and institutions are pushing price, and we're just piggybacking right off their move. And then we get out once our edge has disappeared. So our edge is going to be the buy indicator and the sell indicator. So we get a buy indicator right here. You can ride that up and then just exit once it gets to the rejection point. Same with right here. We get the sell signal, ride this down for about, you know, 40 pips, and then jump off the ship. That's literally what we're doing. Like what we're doing is like, so a visualization of this is like, think of a rocket, right? The institutions or market makers are like, they shot this rocket up. We're just riding that rocket up to this point, and we're jumping off before it gets to this point, because once it gets to here, this is where it gets tricky. Like you can see this huge spike right here, because what happens is a lot of people try to count this as like a double top right here, and then they take a sell. So what they do is they spike price up to stop everyone out, and then they push it back up further. And that's how you get caught in like those little traps. And that's why I don't like having a tight stop loss. Like a lot of times you'll see people do this. So if you see this right here, you see this nice rejection, right? So people are thinking it's going to come down. So what they do is they do like a 1 to 3 risk reward. So a lot of people give me shit for like doing 1 to 1, but this is the reason why I do 1 to 1, because if you did, 1 to 3, something like this, you get stopped out. And then they try to, so this is what happens. They enter this right here, they get stopped out. What do? They do it again. They're like, oh yeah, this is manipulation. I'm gonna get in on the next try. They do it again right here, right? Same thing right here. They do the same exact thing. They put their stop loss for a 1 to 3 right there. What happens? What's over here? They get stopped out again. And they're like, nah, okay, this is the third time. It's got to play out this time, right? So what do? They do it again because they see this rejection point. And it's just funny because a lot of people trade like this, and it's like, they get mad at me because they're like, oh, why do you trade a 1 to 1? Because look, dude, if you had a 1 to 1 here, he would have never gone stopped out. So like, look, check this out right here. So if I rewind to this point, and if I was trading the same strategy you were trading, see this right here, this 1 to 1, I wouldn't have gone stopped out. And then again right here, I still wouldn't have gone stopped out. If your stop loss is too tight, that's how you get stopped out. And then, those 3 losses back to back, that's going to add up to one full 1 to 1 risk toward anyways. So why would you, you're taking the same loss. It's just, it gives you a better cushion, because in this situation, if price shot up like that and it shot back down, you would have been like, oh crap, market's fucked right now. So I'm trying to like exit this trade. You could have exited with profit right here before you would have gone stopped out. So, I mean, there's a lot of different ways to trade. There's no one right way to trade. I'm just saying that this is how I trade, and it works because I've been doing this for a long time. But if you have the K2 indicators, you could add this to your arsenal, and you could be really good. You could pretty much just figure out ways to prevent yourself from getting stopped out. Because the thing with me is, like, whenever I get stopped out, I go back and I analyze that trade. I go and I make sure I understand what I did wrong, because I don't want that to happen again in the future. And that's why K2 has such a high win rate, because I'm refining the strategies all the time. It's not like, with price action, there's just like a couple strategies and people just keep reusing them. For me, it's like, if I get stopped out of a trade, which is supposed to be a good trade, I go and I analyze that so that I can see, what can be changed with the K2 indicators or the K2 strategy, so that that doesn't happen again. And, currently the strategy that I explained earlier with momentum, this is what I figured that, works very good long-term. It works literally like all year round. Like even during summer, like a lot of people are struggling during the summer, but we're still killing it because, momentum is always going to be there. Like literally we're just piggyback riding the trades. And if you're able to do that, you could just keep, rinse and repeat, same process every single time. Sneaks and window seat said, do you use the K2 pivots to avoid fake outs from invalid buy and sell signals? So the K2 pivots, I usually use it just for the trend. Well, I know I do use it for the rejection points too. I take that back. So pretty much right here, you can see, you can kind of tie it together. So you can see right here, like when it lines up with the zone, odds are it's probably gonna reject off it like it did right here. But you could use this to help you not get caught in fake outs. So I'm a trend continuation trader, so I trade in the direction of the trend. So if I was to take, I'm trying to find an example here. Yeah, like something like right here. So like how price comes down right here, I probably wouldn't have taken the sell because, this would probably be a fake out right here. So price comes down and then it comes back up right here. I wouldn't have taken a specific price, like a specific direction of trade, because obviously price is trending up. So I wouldn't go against the trend, but like you mentioned, to avoid fake outs, you could definitely use it for that. So like right here, you can take a sell, but I wouldn't take, because price is trending up, I obviously wouldn't take that. But if you were to take a trade in that direction, it would give you a good visualization as to where price might be rejecting out from. So yeah, you can use it to like picture where fake outs are going to be. But for the most part, I use it mostly just for the trend, because I use the zones more so for identifying fake outs and rejection points rather than the pivots, because the pivots, they're dynamic, so they just move as price moves. But like looking at right here, so like if we took this trade over here, we wouldn't have taken a buy, even though price was trending up. So you can see right here, this is a nice trend up right here, right? So even though price comes up like that, I wouldn't have taken a buy right here because I would have had this zone plotted for me to avoid this fake out. So I think the K2 zones are, they're more better used for identifying fake outs and, rejection points versus using it for the pivots. But you can use it both together as well. Like right here, this would have been a good area to use it because, once price comes between this point, it's stuck between two rejection points. So, it's either going to come down, reject off this point, and then shoot back up, or it's going to, break below and come down here. So if you move this forward, you can see right here that it kind of creates like a little triangle right here where it can either break below it or shoot above it. But there's a ton of ways to apply it. I mean, there's not just one way, but if that helps you to identify fake outs, by all means, you can use it. There's like not one specific way to use it. But for me, I just use the pivots for identifying the trend. So let's see this. So that's odd USD. So I kind of went off on a long tangent right there. So pretty much the upper zone here is going to be 0.7325. And then the lower zone right here is going to be 0.7254. So that's odd USD. Let's move on to the next one. CAD CHF. And I'll speed through this a little more. I know I might be going a little slow for you guys, but I just want to make sure you guys understand what I'm doing and the reason behind doing this in the beginning of the week, so that during the week you kind of have a good understanding where and where not to trade. So I'll just speed this up a little bit because I know some people are short on time or some people just want to take trades. So I'll just give you guys the zones here and then we can go over questions a little later. So let me I really don't like when pairs kind of cross over like this too much because it's kind of hard for you to identify where price is going to. And this is a messy pair. CAD CHF. It normally moves like this, and it's not something we trade too often. But you can see right here, these zones have been established from like way back. So if I zoom out of here and I just hide this stuff, you can see that this is a pretty messy pair. Like it generally consolidates a lot. It's tested the same exact zone. So this is the upper zone for CAD CHF is going to be 0.6919, and the lower zone is going to be 0.6873. So you can see right here that this same exact area has been tested so many times in the past. It's been tested in August last month. It's tested in June and July right here. And then if you go even farther back, you can see that it's been stuck in this area since March of this year. So this huge drop came, when COVID started, and then it's literally just been within this zoned area for a while. It looks like it tried to recover right here, but then now here we are again, same point. It looks like it's going to drop further down. But until then, it's probably just going to consolidate. It looks like it's going sideways. So until it breaks below the lower zone that I just gave you guys, it's probably going to just move sideways until it goes above or below. Because you can see right here, once price breaks above it, it shoots up pretty high. So we could probably anticipate that to shoot higher. And then again, right here for breaks below it, it looks like it could fake people out, spike people up to just stop people out, and then drops heavily. So this is actually really big. Like once price breaks above it or below it, it's going to provide for a pretty big move following that, it looks like. So right here for breaks above it, it's probably going to shoot up. Let's see how many pips could it move. So at last, it pushed up about 70 pips, 65 to 70 pips. And then below here, if it breaks down here, it looks like the last time it dropped over here, dropped about 122 pips. So I'd probably wait for it to break, below or above this one of these zones. But I'm not sure if this is going to happen this week. We'll see after the Fed speaks, probably tomorrow. So that's CAD CHF. Next pair, go to CAD JPY. Do the same thing. Turn on the K2SR version 2. Draw my zones right there. connect this one right here. And then we'll connect these two right here. And like I mentioned earlier, when price breaks into a new area right here where it hasn't tested in a while, so the last time it got to this point was back in last month. So more than a month ago, it was below this point. But it's been a while since it's been down here, so there's no zones that are created on this time frame. So we'll go on the higher time frame, the 8 hour, and then we can draw the lower zone from there. So let me just draw this zone right here, and I'll go back to the 4 hour, and then I will hide the SRs. So just like the previous pair, you can see that this is a pretty big zoned area. So once it breaks below this point, it could go down for a pretty long while, like it did right here. Or it could reject off it. It could come down to this point, reject off this lower zone, and shoot back up. Those are the two different scenarios that could play out here. So the lower zone for CAD/JPY is going to be 78.96, and then the upper zone right here is going to be 80.03, which is rounded up. So yeah, this could actually play out pretty nice. So if the news for the Fed tomorrow is bad for the US dollar, obviously, like I mentioned before, the yen's a safe haven currency. So if it breaks below, which might happen if the news is not good, then it'll probably just keep dropping. But we'll have to wait and see how that plays out. Looks like there's news tonight. So I guess it looks like it's gonna happen in about 4 hours. So once that happens, we can probably see some movement, and then it'll probably push price, either below or a nice rejection back up. So we'll see how that plays out. Next pair is CHF/JPY. Delete all that stuff. Turn on the K2SRs. All right, let's get through this. Top zone right here. Next zone right there. Next zone right there. And it's real simple, guys. Like for me, I'm doing this really slow just so you guys can follow. But once you guys do this enough times, like I do this every single week. So if you do this enough times, you can literally mark up every chart within a few minutes. And that's generally what I do. I used to do this just on my own, but I know a lot of people are asking if I can do it live so you guys can see, how I start off the week. And yeah, I don't mind it because I'm doing it anyway. So I might as well just share with you guys. So again, right here, there's no zone on the bottom, go on the 8 hour. And then this lower zone is pretty far down. So it's probably going to continue dropping. It looks like all the JPY pairs are actually dropping pretty heavy. So this could be a nice sell. So right here, I'll hide this SR, and then it looks like this is probably going to continue dropping from right here to this next zone. So the lower zone for CHF/JPY is going to be 114.13, and then the upper zone right here is going to be 115.473. So once it drops to this point, it looks like it can reject off, or if it breaks below, it'll probably drop pretty heavy. So just looking at previous data over here, the last time it broke below here, it dropped 110 pips. That's a lot of pips. And then the rejection point right here, so price came down. So these are the scenarios I'm talking about. So the reason I can see that this might happen, this rejection off this point, is because it happened already right here. So if it happens again right here, this is going to be considered like a double bottom. But like I mentioned, the market makers and institutions, they know that a lot of people are looking at the same spot. So what they could do is they could probably just spike price. Once price reaches this area, people are going to try to buy, right? So once people buy, they'll spike price right down here, stop everybody out, and then shoot it back up. It's just funny because this happens all the time, but a lot of people still fall for it. But yeah, so like right here, you can see price rejected off this point. If it does that again, it has this whole open field right here for like 80 pips. And then if it breaks below, it's the same difference. It drops quite a bit. Last time it dropped over here was about over 100 pips, 110 pips. So I'd be careful for that. If we got a sell signal here, I would take it, which we did. Okay, so like this would be an entry right here. This is like I mentioned earlier. So we did get a sell signal right here. So what I anticipate happening is it's going to come down and test this zone over here. So that's probably going to happen right there. I didn't call this because the signal came up on Friday when market was closing at 10 a.m. So this could be a continuation of last week's move, or it can be a rejection back up because we're in a brand new week. So it's just a little risky right now. Let's hide that. So that's CHF JPY. Let's move on to the next one. Euro odd. Delete this stuff. K2SRs. All right. So if price is like if this zone is way up here, generally what I'll do is I'll just create a big zone because price is way down here. So I don't anticipate price to shoot way up here anytime soon. You know, it's probably not going to test this area for like another couple weeks or a week or so. I mean, you know, this might happen right here where it was a huge free fall. And this happened within a week. So if that happens, I mean, it could come and test it, but it's not really of importance because price is so low down here right now. So instead of drawing those little individual zones, I'm just going to draw a big zone from down there because the real important zones are going to be down here for the most part. Let me see how big this looks like a huge move. So I don't think I'm going to connect these two. Yeah, this is a 75 pip move. So the reason why I wouldn't create a zone here is because even though it's within a zone, I still would like to trade within it. Like you can still take, you know, sells and buys between these two zones right here, instead of creating like a huge zone right here and ignoring that entire move, because this is such a big space where you can still trade within it. And if that happens where a zone is out on its own, I just draw a horizontal line right there, just so that I could have some sort of identification as to, you know, where price is likely to reject from. Let's see. All right. So let me draw this right there. And Euro odd moves kind of crazy. That's why you see these huge movements. So it's kind of hard to really get a good picture of it. But I mean, it still works. Like you can still see here that it's been ranging within this lower and upper zone since June. So it looks like it's just getting smaller and smaller. So the consolidation was this huge zone right here from this lower end to this upper end. And then it just kind of consolidates into these smaller zones. It drops right here, and then now it's consolidating sideways from here. So once price breaks above this, or it's below the zone right now currently. So what might happen here is it might come down and test this zone, or come back down here and test this zone, because there's so much space in between that it could literally go either way. But for Euro odd, okay, this upper zone right here is going to be 1.62538. And then this lower zone down here, I mean, we can count this zone right here because it's probably going to consolidate within this area. So this zone right here is going to be 1.61778. And then the very bottom zone down here is going to be 1.61383. All right, so that is going to be that. And then let's move on to the next pair. Euro CAD right here, so same thing. Turn on the SRs, and then let's draw our zones. This is a super messy pair. You can see that all these cross over right here, and I don't think it moves that much. So it's going to be kind of hard for us to really get a good picture of how much. Let's see. Yeah, it's only about 9 pips, so we might have to just connect all of these right here. Yeah, this is a super messy pair. I don't even think I'd even bother trading this because there's not enough space to really trade it. I mean, I hate when this happens because there's so many zones here. You can see that it retests these areas like very often. And this is a pair that I don't really trade that often anyways, just for that specific reason. You don't want to get caught in these fake outs. But you can kind of see here that, it still has some sort of structure there, except you don't really know if it's going to follow the, because these zones are so big. I mean, they're not huge, but they're big. It's a 50 pip zone right here. So the thing is, it can consolidate within the zone like it did right here. You can see price comes and then it literally just bounces in between these areas. So I wouldn't take a trade until it breaks above. It looks like it's going to break above here. So if it does break in this area, then you can ride it to the next zone right here. Basically what happened right here. So price broke this zone right here and then it shot up, but then it was literally bouncing back and forth before it got to this high. So this is a bit of a tricky trade, but I'll just give you guys the zones here. So this upper zone up here is going to be 1.57566. And then this lower zone right here is going to be 1.55486. And then within this small range that it's moving at, this is going to be the upper zone is going to be 1.56602. And then this lower zone right here is going to be 1.56099. So it's just going to be, I mean, this is a risky pair. I personally wouldn't trade it unless it breaks above here or if it breaks below, like way down here. Because the last thing you want to do is enter a buy right here or enter a sell right here, and then it just shoots up on you. So I'd be careful with this pair if you guys are deciding to trade it. Move on to Euro CHF right here. Take everything off. Wrong indicator. All right, cool. Yeah, this is another pair that kind of, it's a messy pair. You can see you can usually tell if it's a messy pair if there's a ton of wicks all over because it's not really moving very smoothly. So you can see that these zones are kind of all over the place. So we have that drawn up right there. I'll take this off. Obviously once you draw the zones, it looks a little nicer. But just looking at it here, you can see that it literally just spikes around for EURCHF. So it's broken above this zone right here. So what I anticipate happening is for it to continue up to this next zone over here, even further up. I don't know. This is a messy pair. So this could literally go in either way. This is a pair that's known for causing a lot of fake outs. So I'd be careful if you're trading this. However, it broke above the zone right here. And if you took this buy signal or if you caught it right here, you could have just rode this to this zone. And then again, right here, same situation, it broke the zone. So this would have been a buy entry over here up until probably this next zone. And see how these, like this pair and Euro CAD, they don't really move that much. Like you can see from this open area, it's only about 20 pips. So it's kind of hard for you to really make a big pip move because it doesn't move as fast as other pairs. Like even these little areas right here, it's like 6 pips. And then the spread's 2 pips. So you literally have to pay about 4 pips for you to get in and out of this specific trade. But looking at the zones here, the upper zone is going to be 1.0822. And the lower zone right here is going to be 1.07795. All right, so let's move on to the next one, EG. Delete that. Open up the SRs. Yeah, it looks like all the Euro pairs are kind of messy right now, which is fine. I mean, it happens. And it's kind of an irrelevant area because price is way up here, but I'm still going to draw these zones just to have them drawn for you guys. And I'm sure you guys like looking at how it kind of maps out the foundations of, the rejection point. So again, right here, we'll move to the 8-hour. Super messy pair. I'm just going to draw these zones here because they're so close where price currently is. And the thing with the 4 hour is that it's kind of way far out. So we'll go to the 4 hour right here, and then we'll turn off the SRs. So you can see here, it looks messy, but once you take off the SRs, it actually looks pretty clean for EG. So you can see that it's, you know, last time it's gone to this point was back in June. So June and July, it was testing this area, but it was really testing this area like crazy back in March when, you know, COVID was happening. So yeah, looking at EG right here, it looks like the upper zone is going to be 0.91755, and then this lower zone right here is going to be 0.91308. So it's stuck within it right now. So until it breaks above it right here, I wouldn't take any buys, or until it breaks below down here, I wouldn't take any sells. So once it breaks up here, you can take a buy, ride it up. Same situation right here. If it breaks below, you can take a sell and ride it down. Let's see where the momentum is pushing right now. Momentum's currently pushing up. So it looks like it's probably going to break above this point and shoot on further. So I'd probably have a buy bias for this. But like I mentioned, it would have to break above this zone and close before we would take a buy. So I'd be careful with that. But it does look like a good buy once it does break above there. Go to EJ over here. Turn that off, turn that on. All right, cool. So right here, we'll draw the zone. That zone right there. There, and we'll connect these two over here as well. All right, cool. So we got those zones set up. We have no lower zone right here, so we'll go on the higher time frame, 8 hour. Wow, it's got a pretty nice free fall right here. I'll probably just connect this one right here, the 4 hour one with the 8 hour, because it's so close. But it looks very good. So it looks like it's going to be dropping. So we'll go back to the 4 hour. You can see this. It looks really nice actually. So looking at EJ right here, you can see the last time it was in this open field was last month, exactly a month from now. So on July 20th, it was at the same exact point. So you can see price rejected off it and it dropped down pretty nice. So it's probably going to continue to drop down right here. And then it tested the same exact price point back in June. So every single month it's tested the same exact price point. So on June 20th, that's crazy. It's oh no, sorry. Okay, so this is the 4th. I was going by the year, but that wasn't the day. So June 4th right here, it tested this, it rejected off it, and it came down heavy. Again, right here, it tested it, rejected off on the 20th of July, and it came down sort of heavy. So let's see how many pips is that. Actually, it did. So it doesn't look like a lot of pips, but it's actually 120 pips for EJ, which is a pretty decent amount. So again, right here, price rejected off it. Let's see where momentum's pushing it. Momentum's, it gave it a false buy, a false sell signal right here. So we'd probably have to wait for something valid before taking something here. But I think even without that, it's probably going to continue pushing down. I don't know if it's going to push down all the way down here, but it looks like it's definitely going to be coming down. So, you know, where price currently is, that's a huge drop. It's like 180 pips to the next zone. And the upper zone right here for EJ is going to be 124.598, and then the lower zone right here is going to be 121.764. So those are the two zones right here. I do anticipate it to come down. I might even enter a sell soon. That's a nice bearish candle right there. So we'll see how that plays out, but I'll definitely come back and take a look. This looks like a great pair. It looks like all of the JPY pairs are actually dropping. So CAD JPY is dropping. CHF JPY is dropping. So our JPY, they're literally all dropping. So this might be a good sell right here if they continue to drop. But yeah, so that's EJ. I'll move over to the next pair, which is EN. So EJ is done. I have the two zones drawn right there. Next pair is going to be EN. Delete this stuff, turn on the SR. And then, yeah, this is perfect. I like when this happens when they're kind of, when they're all spread out. It makes it a lot easier to follow. But this has a ton of zones here. Let's see. We got all these right here. See, this is like the perfect pair that I like to mark up because it has everything so spread out already where you don't really have to worry about things crossing over or, you know, marking up the wrong zones because everything here is so nice. Like, check this out. This is how it looks like with the SR on. I turn it off and it like lines everything up so perfectly. You can see that the rejection points are pretty clear. Even though it's a messy pair, just looking at this here, you can see that it respects these zones pretty perfectly. So price comes down, comes up, rejects, and it literally bounces pretty clean. So same situation right here. It looks like, you know, this is what I was talking about, the whole price action thing. Like sometimes people would consider this like a double bottom and people would take a buy right here. But you can see how the market maker spiked price right here to stop people out. So it's a huge spike, like 40 pips to stop whoever would have. So let's see. If I replay this to like something like this right here, you know, a lot of people will try to call this a double bottom and they'll take a long position right here, like right on the zone or right on the low. And then they'll have their stop loss pretty tight, obviously, because it's a fast moving pair. So we'll have their stop loss at about 20. But then if that happens, you know, you would have gotten stopped out. But yeah, you know, just looking at EN right here, where price currently is, it looks like it's, personally, it looks like it's going to come down. So I think I'd wait for it to come down right here and then take a sell. Let's see where momentum is. So this momentum actually started from way up here. So if you took this sell, or you know, if you saw this sell, you probably would have entered right here once it broke this zone. That would be a zone entry, and then take a sell right there. You could have rolled it down for like 150 pips. So same situation right here. I would have waited for this to come down below here, and then once it does, then I would take a sell. But this upper zone right here is going to be 1.76534, and this lower zone right here is going to be 1.74668. And then again, this lower zone down here, because once it breaks below, you're going to want to know where the next zone is going to be. So once it breaks below this point, this next zone down here is going to be 1.73462. So let's move on to the next pair. Euro USD. Delete that. K2SRs. There goes that upper zone. Man, this is like I mentioned earlier, like EN was a nice pair that was lined up. EU is like complete opposite. This thing's so messy. It's kind of hard to really identify where everything is. And I'm just gonna have to draw a big zone right here because they cross over so often. And then same situation right here. So because these cross over so much, I'm just gonna make a big zone. And then once we have that, we can hide the SRs and voila, there you go, looks nice. So it looks nice, but it's still messy. So it's kind of hard to tell, you know, where price is going to be. I'd probably wait for it to either break above here and then take a buy, or, you know, break below here and then take a sell, because the last thing you want to do is get caught in this trade. So if you take a sell right here and then it rejects off it, you're going to get screwed. Or if you take a buy right here and then it rejects off it up here, you're going to get screwed, you know, either way. So, you know, to be careful, I'd probably just wait. And then also because tomorrow the Fed's going to speak. So when he speaks, you know, odds are it could literally go either direction. But I'm assuming it's probably going to go up, because I don't know what they're going to say, but they're probably going to be talking about the stimulus. So there goes Euro USD. Next pair is going to be GA. So it looks like we have 1, 2, 3, 4, 5, 6, 7, 8, 10, 11, 12, 13. We have 13 Forex pairs left. I'm going to try to speed through it. We've been on this for about an hour already. And a lot of people they just want me to get through this so I can give you guys the zones. So I'm going to try to zoom through these, and then we'll go over the indices, the main ones like NASDAQ, S&P, the DAX, and US 30. And then I'll probably go over gold as well, since you guys like to trade gold. So we're here on GA. We turn on the, here, I'll show you guys how how you guys can do this super quickly. So pretty much like I mentioned earlier, this is a naked chart. You just zoom out and then you turn on the K² SRs, and it's real simple. Like once you do this enough times, you literally just, it's super simple. You just do the same thing over and over for every pair. So you can see here how fast I can just knock this out without really, putting too much effort into it. And then I can still show you guys what it looks like, end product. So I literally did this in like a few seconds. Drew up the zones and then hide the indicator. And there you go. Within a few seconds, I have these nicely drawn zones right here that are perfect. So this upper zone right here is going to be at 1.78412, and this lower zone right here is going to be 1.76914. And I'm just going to toss in another lower zone because if price breaks below it, odds are it's probably going to continue down. So it'd be good to know where that lower zone is going to be moving forward. So in this situation right here, if we don't have one on the 8-hour, we're going to move even lower to the daily. Nothing on the daily, we'll go to the monthly. Like if we have to go, or the weekly, if we have to go that far out, it's perfectly fine because it gives you a good understanding where, where the next zone is if you don't already have one lined up. So right here, I'm just going to draw this one. I know it gets a little harder if, you go on the higher time zones. I mean, the time frame, sorry, but it's easy once you draw it. So you just draw it like that, go back to the 4-hour, turn off the SRs, and there you go. See, earlier we didn't have this lower zone right here, but now we do from this is the weekly, I believe. So you can have a good understanding where price, might be rejecting from at some point. But yeah, so that's GA right there. Let's move on to the next one. GC, delete that. Turn on the SRs. And then this point right here. Yeah, so price is way down here. So these are the zones from the 4-hour. So we'll go on the 8-hour to see if there's anything closer. Perfect, there we go. And I'll just draw both of them just so that we have reference. Go to the 4-hour. And there we go. So perfectly lined up right there. The upper zone right here is going to be at 1.72366. And the lower zone right here is going to be at 1.69790. So this looks like it's coming down, or it rejected off this point. So it looks like it could either push up from down here up to here, or it might just come back down because it looks like it's consolidating right now. It's just going sideways. So it can literally go up to here, or it might come back down to retest the zone. So that's GC. Let's move on to the next one. GCA. Pound Swiss, delete that. Turn on the K² SRs. Let's make this a big zone right here. It looks like, thing is, price is way down here, so this is kind of irrelevant, but let's make a big zone. And then we got to get that lower area too. So it looks like this is actually kind of stuck in a tight spot right now, which is fine. Go back on the 4-hour, IDSR. So it's literally within this tight spot right here between these two zones. I'd probably wait for it to break below and then take a sell because it looks like it's in a downtrend, or it came down retraced back up, went consolidated, and then it looks like it's going to drop back down. So this upper zone right here is going to be 1.18344, and this lower zone right here is going to be 1.17529. But this is very similar to like the other CHF pairs, like the Euro CHF, and the same with like GCAD and EuroCAD over here. They're both messy pairs, so they're a little bit risky to trade. But if you were to take any trade right here, if it breaks below, it looks like it could play out pretty nicely. Because looking at the Swiss franc over here, let's see. Actually, I don't know. This is a risky pair because they're all kind of moving opposite. They look like they're moving up actually. So it might move up a little further, then reject off that point and drop. But who knows? We'll have to wait and see what happens during this week with all the news events. So let's move on to GJ over here. GJ is one of our favorite pairs. So let's open up the K2SR. And there we go. Let's draw this out. That point right there. That point right there. All right, cool. This lower zone over here. So it looks pretty decent. I kind of would like to see where the lower zone is going to be, because if it breaks below here, which it looks like it's going to happen, kind of want to know where the next point of rejection is down here. Once we have that, just hide the SRs, and there we go. We have it lined up pretty nicely right there. So you can see this point was actually tested way in July. So around this time last year, it was stuck within this area. It looks like it's going to be stuck within this area again, unless it drops super far below. So this upper zone right here is going to be 136.64, and then the very lower zone right here is going to be 133.962. With this small zone right here, if you guys want to eye that as well, it's 134.921. So it looks like it's consolidating right here. I would wait for it to break below before taking a sell, or even below this zone right here. And then you can probably take a sell way down here and write that down for like a pretty big move. But like I said, with the Fed coming up and the Japanese yen being a safe haven currency, we'll have to see how this plays out, because the Fed news tomorrow could affect it pretty heavily. Next pair is GN. We got a few more lined up, guys. So we have, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, about 9 pairs for Forex, and then I'll go down to indices, and then I'll go down to gold as well. Or we'll cover gold first. It's right here. But here's GN. Let me delete this stuff. Turn on the SRs, and then let's get to drawing our zones. Like I mentioned earlier, guys, like when price is way down here, these zones are kind of irrelevant because price isn't going to push all the way up here. So I usually just make these a little bit messier because they're kind of irrelevant at this point. Price shoots up to this point up here, and yeah, I'll go back and redraw my zones. But it's kind of pointless for you to really take too much time to draw these upper zones when price is so far below. So this is where it gets important, because price is close to these areas. You want to know where the zone is, because if price was to shoot up from here, then you would know that this is the rejection point right here. So we have that lined up. I'd like to see where the lower zone is just in case. Let's draw this right here. All right, cool. All right, cool. So this, it's the same situation with GJ right here. You can see that they're very similar. You can see that it's within this like lower zone right here, but then there's a lower, farther zone down there. It looks very identical, GJ and GN. But looking at GN right here, this upper zone is going to be, you can see right here, it's 1.93849. And then the very lower zone down here is going to be 1.90000. I'm just going to round it down to be easier. And then, the zone that it's stuck in right now currently is going to be 1.91125. So right here, this can reject up from this point, or it could continue down and go for a free fall. It just depends on how the pound is going to be weighed this week. The pound was super weak last. Let's see, yeah, since last month, it just dropped like crazy from right here. August 20th, it literally dropped from there to here for like nearly, let's see, 1,200 pips. That's a lot. That's a big move for GN. So, and we'll see how it plays out this week, but those are going to be the zones for GN. GU, delete this, open up the SRs, zoom out of that. So right there. All right, cool. So this is actually really nice. I like that it's out in the open already. So there's not really much to question. We can hide this, give you a full picture right here. And yeah, there you go. So the zones are pretty lined up pretty nicely right here. The upper zone is going to be 1.30094, and this lower zone down here is going to be 1.28643. So it looks like it's in consolidation right now. It's literally bouncing in between these two zones. Right here. But once it breaks below this point, it's probably going to drop pretty far. But like I mentioned, tomorrow the Fed's going to talk, so it's obviously going to affect GU. Plus, I don't know if Brexit's going to get any better. Let's see for the news. Because there's GBP news tomorrow as well. So, I mean, we'll see how this plays out. But there's just not too much space right here. So if I was to take a sell, I mean, actually, it looks fine. Let's see where the momentum is pushing. Yeah, it looks like we got a sell momentum here, but it's literally just consolidating. It's going sideways. So I'd wait for some extra confirmation before taking this because it's just going sideways for now. Last thing you want to do is get into this trade, and then it goes the opposite direction. So next pair is going to be the NZD pairs are usually like some of the hardest ones to follow because you can see here they're a little messy. So let me just draw this right here. That's good. Let's see this down there. And I'm not going to really focus on this too much because, like I mentioned earlier, like price is way up here. So there's these zones down here are kind of irrelevant, but I'm just marking them up so that you guys can see, where these zones are. All right, so now we need an upper zone since there's no upper zone there. So we'll go to the 8 hour, and it's perfect. It looks like it's within this area right here. It actually rejected right off it. So yeah, for this pair right here, I would wait for it to break above it because it's just consolidating. It's literally just bouncing back and forth within this little area right here. So I'd probably wait for it to break above it and then take a buy, or break Actually, there's not enough space right here for you to really trade, even if it breaks below here. It's only like 20 pips, so I wouldn't even take a sell because it might. What might happen here is if it does break below it, like right here, it'll probably just bounce off this point and then shoot back up because it's obviously in a strong uptrend right here. See, so it's probably going to come down, establish a higher low and higher high, and then continue upwards. But I would wait for that confirmation above before you take this trade, because the last thing you want to do is enter a buy and then it ends up dropping because it has to establish a higher low. So that's NZD CAD, NZD CHF. Let's mark this up real quick. All right. So we got this right here. Actually, let's see how much this is. Yeah, it's only like 15 pips. So we have to connect these two, and we don't have to, but it's better to just connect these two than to split them up. So there goes that right there. It's lower zone over here. Another one down here. And then we've got a bunch of these like smaller zones down here. I'm just going to connect them. All right, cool. So there we go. Hide that. Zoom out of here. And yeah, this upper zone right here is going to be 0.62145. I'm just going to round it up. And this lower zone right here is going to be 0.61423. So once it breaks above this point, then we can probably ride that up. So let's see how many pips that is for. It's a pretty nice move, about 33 pips. So you can see right here that, if you guys ever want to like kind of predict what's going to happen next, well, not really predict, but see what's happened in the past, you can see right here that when it breaks above it, it usually goes up and then it comes back down and then it comes back up, so that you can kind of have a decent framework as to how it's moving. So like right here, you can see it tested it over here in June, and then again it got into the same zone in July, and then again in August right here it attempted to, but it looks like it dropped way down. I can't remember if anything happened early in the month. I think something did happen because I know that it was kind of rocky in the beginning, but it looks like if it breaks above here, well, that's going to be an issue. So you can see right here that it's kind of tested this area. So the thing is, if price comes up to this point, and if it touches the same exact price point, this is probably going to be like where the bank algos are trading. So if it goes to the exact price point right here at 0.61863, if it rejects off that point exactly, then this is probably going to be a new zone. Because like I mentioned, these zones are only created if price is tested that specific area. Like it has to be the same exact price more than 2 or 3 times. So if that happens, then it'll probably come dropping down. But like I mentioned earlier, these NZD pairs are kind of tricky. So be careful when you trade any of these NZD pairs. So that's NZD CHF. Here goes NJ. All right, guys, we're almost, I know we've been on this for a while, almost like 2 hours now. So once we get through this, I'll get to gold because I know a lot of people here want to see gold. And then after that, we'll get to the indices because I know that's like one of the main things for a lot of people here as well. So let me just delete this off. I know a lot of people don't care about the NZD pairs, but I'm just going to go over it anyways. I think the only NZD pair people like to trade is NJ and NU anyways. So this is perfect. Let's draw this zone up here. Let's make one big zone. This one right here. This one's kind of messy, so let's see. I'm just gonna go from there. And it doesn't really matter which way you guys, if you guys decide to connect certain zones with another zone, because they're still going to be considered zones anyway. So as long as you have the zones covered, it could be a good rejection point for you guys. So it just really depends on how you guys want to draw it. But you can see here, like I kind of did this one a little messy, but you can still see that covers every rejection point that was tested. So right here, it looks like price is consolidating. It looks like it's going to come down to this zone right here and then probably reject off it and then just keep bouncing around. Or it might even spike down like it did right here. So it might spike down to this zone or maybe even this zone down here. But this upper zone right here is going to be 71.366, and then this lower zone right here is going to be 70.38. So those are the two closest zones. But if it ends up dropping down here, this lower zone right here is going to be 69.947. And we'll just see how this plays out with the Fed speaking tomorrow. So NU right here, mark this up as well. Zoom out of here. Let's get these rectangles up. All right, cool. So we got this right here. I'll just connect these two down here since price is way far off. And this looks like it's actually in a pretty good range right now. So it's within this huge open area right here. Let's see where momentum's pushing. We actually got a sell signal right here. So, but price is in an uptrend. So, you know, like I mentioned earlier, I like to trade in the direction of the trend. So the problem with this is I wouldn't want to take a sell here, even though we have a momentum sell signal because price is trending down. So I see this as a pullback. I don't see this as, you know, an actual momentum push down. I just see it as some sort of minor retracement. And what I see happening here is I probably see this actually breaking this zone. So I see it pulling back a little bit. I see it possibly breaking the zone. And once it does and close above this area, because you can see here, this is like, it's tested it, it's attempted to break, but it broke, but it didn't close above it. So if it breaks above it the second time and closes, then I anticipate it to shoot on upwards further. Because just looking at this here, you know that NU has been trending up since May. Like the entire COVID, it looks like it's been pushing up from March actually. Because the US dollar is just weak. It's not, I don't see it getting any stronger anytime soon, especially if the Fed keeps printing money. So if that happens, the Fed, you know, has bad news tomorrow, then it's probably gonna break above here and it's gonna skyrocket. So that's it for NU. Let's see what else we got. All right, a few other pairs. UCAD over here. Oh, sorry, did I give you guys the number for this? I don't think so. This upper zone is going to be 0.67893. And then this lower zone over here is going to be 0.66927. So that's NU. Go to UCAD. All right, delete this stuff. Oh man, it's a messy pair. Okay, so let's just see if I can figure this out. I'll just connect these two. Just connect these down here. All right, cool. So let's hide that. It's kind of a messy pair because it's, I mean, UCAD normally consolidates a lot of the time anyways, and it moves slow. So right here, I would probably, I mean, it's so clear that it's just consolidating going sideways. So I would wait for this to break below this, this zone right here, and then I would take a sell. Or in the opposite, I would wait for it to break above here and take a buy. But literally it's just going sideways. So you kind of don't want to get caught in a trade like this. You kind of want to trade in the direction of, you know, where price is actually moving. You don't want to take a sell right here because if you take one here, it could probably reject off this point and shoot up. Same situation right here. If you were to take a buy, it could reject off this point and shoot back down. So it's just a risky trade to take. But okay, so this upper zone right here is going to be 1.32723, and this lower zone down here is going to be 1.31188. And then within this like middle area right here, this zone is going to be 1.32089. So I'd hang tight with this. I'd wait for it to actually break above or below. I don't see the US dollar getting stronger, so I think it's going to actually come down lower. But I think it's going to break down here. Once it does, I would take a sell position. All right, the last two FX pairs. Here's UC as in US dollar Swiss. There we go. Pull up the SRs. All right. All right, cool. So I got these zones right here marked up. Turn off the SRs. And yeah, you can see that it lines up pretty nicely right here. So you can see obviously it's consolidating. It gives you a good picture as to where price rejects from. But right here, it's literally going sideways. So you'd have to wait for it to either break above, like I mentioned, or break below. Because the problem with this is that even if you were to take trades within these small little zones right here, I don't think there's enough space for you to really make a profit or to scalp. Actually, you can make a decent move if you're going to scalp like 10 pips or 15 pips, because the range here is about 30 pips. So if you were to enter somewhere like this right here, or if it was to close below here, you can probably scalp it for a little bit, 15 pips. But it's just too risky. I'd wait for it to break below or break above, because obviously you want to take a trade when it's out in the clear. So for USD CHF, this upper zone right here is going to be 0.91232. This lower zone right here is going to be 0.90513. So those are the two zones right there. But I definitely would give it some time. Here's UJ. Here's our last Forex pair. Drop these zones real quick. I know I have these other Forex pairs like the USD SGD over here, the Singapore dollar, but we don't really trade it. So I'm not going to mark it up. If you guys want that, I can mark it up for you. But I don't think many people in the group trade exotics at all. So it's kind of irrelevant at this point. We did have a lot of people that traded exotics before. They were like on and off trading it, but I think they stopped. So there's really no point in me drawing those out unless you guys really want it. If you guys want it, I can. It's not a big deal, because you can see I'm doing this pretty quickly. UJ, like I mentioned earlier, these upper zones are kind of relevant because price is way down here. But it's just good to have it marked up in case. All right, cool. Looks like that's it for UJ. Like I mentioned, the JPYs are all kind of dropping right now. So the only problem with this right here with UJ is that it's going to test it. Well, it already tested this bottom right here. So the problem with it is it could either, push up, or it could break below and close down here and go for a free fall. And that's what I'm anticipating. So I'd probably take a sell if it breaks below here. And looking across the board, when last time it dropped like that, it dropped pretty crazy in March. This is when COVID was like huge. So I do anticipate it to drop again. We also have the Fed speaking tomorrow. It's definitely going to affect the UJ because, the US dollar versus Japanese yen, it's a safe haven currency. So I do anticipate it to drop further, unless there's some crazy news tomorrow that benefits the US dollar insanely, which I don't see coming. But yeah, so that's USD JPY. The upper zone right here is going to be 105.301. This lower zone right here is going to be 104.188. All right, cool. So let's go to gold now. That's what a lot of people have been waiting for. So let's look at gold, turn on the SR, and then let's draw these zones. Oh man, gold's kind of messy. It's kind of hard to really see where the rejection points are. There's so many different scenarios here, but I'll try to make it as easy as possible. All right, here we go with gold. Let's hide this. Yeah, so it looks like gold is just consolidating right now. You know, if the US dollar is weak, it's probably going to shoot up, which is what I see happening. So I would probably wait for gold to break above this zone over here, because there's a nice rejection off this point. It looks like it rejected, made a higher high, higher low, and it's probably going to continue up. So once it breaks above here, then I would take a buy and then ride that thing up. Especially with the Fed speaking tomorrow, you know, I don't expect the US dollar getting stronger. So for gold right here, the upper zone, this upper zone is going to be 1976.77, and this lower zone right here is going to be 1934.70. It's stuck within this consolidation right here, this smaller zone, which is the higher point is going to be 1956.45. But I think once it breaks above it, it's probably going to just continue on up. So we'll have to give that some time. But yeah, it's pretty much gold. I personally don't trade gold anymore. It's too tricky of a pair. You know, I prefer to just focus on US 30. But if you guys are looking at gold, I definitely think it's going to be a buy this week. And you know, if you just draw the trend lines, it's obviously in an uptrend right here. And then if we turn on the pivots, it's just, you know, it's consolidating. It's going sideways. So if it does break above it, then we can see it shoot above. But until then, it's probably just going to consolidate until after the news tomorrow, or if anything happens from now until then. So there's gold for you. Now we'll move on to the indices. We'll just go in order. We'll look at the Aussie. A lot of people like to trade this. So I'll chart it on the 1 hour since we trade this on the shorter time frames. Zoom out of this. All right, this actually played out pretty nice right here. So let's turn off the SRs. You can see that the Aussie 200 is actually moving pretty smooth. Here it goes. It's testing this bottom right here. It looks like it hasn't broke this bottom in, dang, I don't know. It's been a while. Okay, so it broke this bottom back in June actually. It's not too far ago. It's like a couple months ago. But yeah, I think if it breaks below this point, so this upper zone right here is going to be 5853.3, and this lower zone right here is going to be 5813.3. So if it breaks below this zone, let's see. So if it breaks below here and it closes, then I anticipate it to keep dropping down. So if that happens, take a short position right there, and then pretty much ride that. You know, last time it's gotten that low was in June, a couple of months ago, and then again right here in May. But you know, obviously this is when COVID was like pushing price like crazy, and I think the Australia did announce like that it's in a recession. So if they're in a recession, I obviously see this coming down further. So I'd wait for it to break that point because you don't want to enter a sell right here and then it ends up rejecting on you, bouncing up, because if that happens, then you're going to be in some drawdown. So I wait for it to close below, and then once it does, you can enter a sell. So there goes the Aussie 200. Let's move on to the next one. The DAX. I know some of you guys trade the DAX. Turn on the SRs. Oh man, there's like one messy zone. Let's connect these two. So it looks like it's currently within a zone right now, actually. So this might be a little tricky. I mean, it looks like all of the indexes are kind of going down. We'll look at US 30 and see how that's moving, but the Aussie's moving down. You know, same with the DAX. Or it might reject off. It looks like it's been rejecting off this lower point right here. So this upper zone right here is going to be 13172.8, and then this lower zone down here is going to be 13062.3, but it's stuck within this current zone right here. So we would probably have to wait for it to break below, because you can see right here it's tested it once, twice, three, four, about 4 times, and it didn't break below. So once it does break below, we can probably anticipate a free fall to happen at that point right here, like it did right here. So you can see back in September, or yeah, it was not too long ago, on the 3rd, earlier this month, once it dropped below here, it dropped pretty heavily. So that's kind of what I see happening here. If it drops below here, I anticipate it to drop further, and then you can ride that wave down. Yeah, I don't know. We'll look at the other indices to see if all of them are going down. Because if all of them are all going down, that's a good indication to just sell instead of buy. But who knows? This could it rejected off this point right here. So what could happen is it could just bounce up, and then once it gets to this point, then it could drop back down. Because it looks like it's been like in a big range this whole time, like literally since the 9th of this month. It's just been ranging between this upper zone right here and this lower zone down here. It's literally just bouncing back and forth. So unless it breaks below here, then it'd be a nice sell. Breaks above here, it'd be a nice buy, because it's going to be breaking new levels at that point. So let's go to the next one. NASDAQ, favorite for everyone here. Let's see, we'll pull up the SRs. Sorry, wrong indicator. There we go. Zone. All right, let's get this upper zone right here. I'm just going to connect these two. And then I'm just going to make this one big zone down here. So we don't have a lower zone over here. So let's go on the higher time frame. Let's go on the 2 hour. I just need to get a lower zone so that I know where to watch out for any rejection points. So go back on the 1 hour, high B SRs. And there we go. It looks pretty nice. So it looks like, yeah, price came up here, and it literally, so NASDAQ's been dropping since the beginning of September. So it looks like it's hit a bottom right here, actually. It's rejected off this point. And then it's kind of in a tricky point, because what happens here is it's going to come up. Once it gets to this point, it can either break above it, or it can shoot back down and continue downwards. The problem with indices is that they don't move like Forex pairs. So even though we're looking at price like this, the thing is, if something is announced tomorrow during the Fed, or I don't know, like TikTok stuff, and like just whatever tech stocks that are, part of the NASDAQ 100, if something happens where, it just wants to thrust price upwards, like that could happen. It could happen like in one day, right? Literally shoot up here, or it could just shoot below. So it's going to be hard to tell, especially since the week just started. I mean, we'll have to see how the market plays out on Monday. And then, once we determine which direction it's pushing, because the thing tomorrow with the Fed talking is, I'm not sure if it's going to affect it like how heavily, but if it does and it pushes it below here, then you can just take that sell, because it looks like it's going to continue downwards. Me personally, I think it has a sell bias, but who knows? There might be something that's announced tomorrow, or Trump might say something, and then he might just pump NASDAQ up. You guys have to remember that we're in an election year. So during the election year, whatever the candidates say will affect the market pretty heavily. So we'll see what Trump has to say tomorrow. I'm sure he's going to have something to say, because the Fed's speaking. So if the Fed says the economy is good, Trump's going to use that to his advantage and say it was because of him, and it's just going to prop up the indices up further. So I mean, we'll see how that plays out. I personally wouldn't trade it today, because it's just too risky, especially with all of the news coming up. With the U.S. Fed speaking tomorrow at 7, it's just too risky. But yeah, okay, so that's NASDAQ. I think we have, let's see, one more. Yeah, US 30, and that's about it. So unless you guys have any other questions, feel free to put them in the chat. Otherwise, I'm just gonna go over US 30 right now, and then we'll see if there's anything else to cover. And if not, then we'll just call it a day, and we'll try to look for entries prior to the next 4-hour candle close. But okay, so let's do this last markup for US 30. I'll turn on the SRs right here. And draw this zone from up here. Down here, let's connect these two. Same with this one. It's kind of messy. We could probably just connect these right here because it's just a little farther lower. All right, cool. So we got these all lined up right here. Let me go and hide the SR. Okay, for the for US 30, the upper zone is going to be 28002, and this lower zone right here is going to be 27543. And then this very, very bottom is going to be 27449. So what I see happening here is kind of similar to, actually, we're going to go over S&P too. Sorry, guys, I skipped that one. But looking at US 30 right here, it's rejected off this low right here, so it might come up. But it's, like I mentioned with NASDAQ, the Fed's talking tomorrow, so it's going to affect the market heavily, depending on what they say. So it looks like it has a buy bias right here because it's rejected off this point, but I'm not sure how price is going to be, pushed tomorrow with the Fed speaking. I mean, not just tomorrow, but the whole week, literally Monday, Tuesday, Wednesday, Thursday, Friday. So it's going to be tricky. It's going to be a tricky time to trade indices this week. I'm personally not going to trade it, or, I might trade maybe one of the days, but more likely than not, I'm probably just going to sit tight because it's just too risky to trade this because, we probably see this spike up like crazy or spike down like crazy. We'll just have to wait and see what happens with Powell tomorrow. So that's US 30. I'll look at S&P. It's probably going to look about the same. So S&P right here, turn on the SRs. So it's a little messier, but I can still mark this up. All right, cool. So we got this right here. Hi, this SR. You can see how it's marked. It's pretty much the same thing with like US 30. You can see this nice rejection down here. Same situation with US 30. They look pretty similar. But yeah, it's stuck within these zones. So, unless it breaks above here, then I wouldn't take a buy until it closes above here, or take a sell until it closes below down here. So the thing with this is, with the Fed talking tomorrow, it could literally spike price up or it could spike price down. We'll just see how, the market reacts to the news tomorrow, and then we can make moves from there. But me personally, I think it'd be too risky to trade these right now because this is literally all speculation, because there's going to be a lot of people that are betting it's going to go up, a lot of people betting it's going to go down. It just depends on, where less of the people are trading. Because if, the majority of people are betting it's going to go up, what's probably going to happen is people put in some buys, and, the institutions, market makers are going to spike price down to stop everyone out, because trading this, you need pretty decent amount of capital to withhold any type of heavy drawdown. So they'll probably spike price down and then they'll shoot it up. Or in the opposite, if a lot of people are betting that, it's going to go down, then what they'll do is market makers will spike price up, stop everyone out right here, and then dump it. So I would wait for the market to react first, and then I would piggyback off that move. So I would wait for them to fuck around and push price up and down. And then once it gets to, you know, the true direction, then I would join it, because it's kind of similar to, you know, the daily entry. So if we turn on this right here, you can see that we got the sell momentum here. So we're probably gonna get a buy momentum. It's probably gonna be a retracement, just shot up a little bit, and then it'll probably dump right after. But we'll have to see what happens with the Fed tomorrow, because literally anything can happen. So I'd be careful. I wouldn't trade indices tonight, you know, just to be safe, because like a lot can happen from now until tomorrow when Powell speaks. But I think that's about it, guys. So I don't see any other questions here or anything in the chat. So hopefully you guys found this helpful. I mean, if you guys like doing this, or you guys like watching this, I do this. I'm going to start doing this every Sunday. So pretty much every Sunday when the market opens, I'm going to go and mark up every chart so you guys can see exactly where the rejection points are. And then you guys can have an edge in the market, you know, when you're trading. So obviously you don't want to take any buys once it gets close to this upper zone. You don't want to take any sells once it gets close to this lower zone. So I'm just doing this to, you know, benefit the whole K2 family. Like, you know, when I win, we all win. So it doesn't really matter. There's no secret here. The only secret is the K2 indicators. If you guys have these, you can go and plot, you know, all these zones up yourself, because I'm trading the same way that I'm teaching. Like, I'm not teaching you guys one way and trading some other way. I'm literally teaching you guys exactly how I trade and how I mark the charts. So if you guys want to be successful long-term traders, you know, just learn from someone that does it himself. So all right, guys, I think that's it. I don't see any other questions in the chat. So hopefully this helps. If you guys want to go back and rewatch, I literally went through, you know, every single pair in order. So if you guys have my watch list, you can just go and you can rewind to the specific pair that you want to see that's marked up, and then you can mark up your charts as well. Or if you guys have access to the indicators, you guys can go do that yourself. But yeah, guys, hope this helped. I'll be in the chat, so if you guys have any questions, feel free to reach out. And then I'll catch you guys later. I'll probably send out a trade if there is anything available in the next 2 hours, once we get to the next 4-hour candle close. But yeah, guys, thanks for showing up. I'll catch you guys in the chat, and then we can catch up there. Catch you guys in a bit.